All right, my spreadsheet doesn't want to work today. I don't know what's going on with that, so we might not have a winner. Although I did put it in, and I at least know who the victor was for this particular round. You guys got any guesses?
Baldwin.
One guess for Baldwin. They did have too much leverage, though.
Yeah, I think it was either Baldwin or us, and I'm sure we're going to get dinged for leverage. Because it's significantly better than we'd hoped.
Okay. Yeah, my spreadsheet just doesn't want to work. I don't know what the scoop is there. So we'll kind of move along and take a look at the round, and hopefully that spreadsheet will come up maybe sometime. Since it says it's kind of working, but we'll see. If not, at the end, I guess I just have to tell you straight out who won, and then I can ship out the spreadsheet at a later time. So maybe nothing wants to work now. We'll see. What'd you guys do to the computers? Everybody got busy and got on them, and it just... Oh.
Yeah, it took mine like 5-8 minutes to log in this morning.
I spent 3 hours yesterday trying to get a test put together because Microsoft Word wouldn't work properly. It was a real pain in the butt. And I didn't want those students to miss out on a test. I tell you. Anyhow, while we're waiting, we can say congrats to the wrestling squad. They took second place at Nationals, so
Good job, guys. Thank you.
6 All-Americans. Yeah, had 6 All-Americans, so it was pretty good showing. Grandview was just unbelievably tough, the team that took first place. So, but if I remember right, they have 7 seniors on their squad. So, so 7 seniors for the first place team and 7 freshmen for the second place team. So, yeah. So we'll look forward to maybe a few more years of success at the national tournament. So, and then gals, we should know shortly. I would think that they would get a bid for the national tournament based on their rankings. So, even though they fell a little short at the LC here the other night when I was listening to that. That was a bad night for listening to sports. I was listening to the Ponies play in the consolation game at the championship, and they got beat. And then I flipped over to the Skylights game, and they came up a little short against LC. So had to sit home and drink beer, and I guess drown my sorrows. So anyhow. So what happened in round 2? It was interesting. Boy, I see some things really taking shape. I do see far more bold moves, bold tactics being put in place as compared to the practice rounds. So you guys are obviously making a good attempt to one up your competitors. So it's kind of fun to watch. It was an interesting round because nobody did exceptionally well. This could be one of those cases where everybody's beating up on each other so much that nobody did exceptionally well, but we had some teams do okay. We did have 2 teams that didn't show a profit, but their loss wasn't that big. Team Chester and Team Ferris each showed a loss. I'm thinking for different reasons, and we might look at those or talk about those as we go along. Team Ferris, I can remember off the top of my head, they look like they're repositioning themselves a little bit, and so that could be the reason for that. Team Chester, I think, is maybe making some investments for the future, so we'll see. A couple of emergency loans. We did have leverage, yeah. Every team, including the computer team, had leverage that would be above the amount or the level that I would deemed to be too much. So 2.25 is the level. So every team is going to get a dinging for leverage. So as we cruise down stock market report, we see both Team Erie and Team Ferris now aggressively buying back some stocks. So that's kind of interesting. You know, and right now, because the stock prices are low, because again the teams are not you know, they're beating each other up a little bit. I'm not going to say they're doing bad, because they're not. They're doing okay. But stock prices are relatively low. It might not be a bad time to invest a little bit of money in buying back some stock, right? It beats the hell out of buying it back when it's at a way high price. Okay, it's nuts. Well, that's when you want to sell stock in a perfect world. It almost never works out that way, unfortunately. In a perfect world, I've seen, for example, oil companies in the real world. I've seen some oil companies just in the last couple of weeks have had to issue some stock. Okay, because they're getting just battered because the price of oil's down. They're just getting beat up all to hell, and so they're having to raise capital, and so they've had to issue some. They've had to issue some stock. Not the right time to do that, you know. But unfortunately, that's the world that they're in. Okay, and they were probably 2 years ago when the stock price was really high. They were probably buying back stock, you know, because things were rolling. They had cash coming in, and things were going really well, and so they were probably buying back stock. And so, it can be a difficult world. That's a real cyclical business. And so that makes it more difficult. Your guys' business here is a little more straightforward, right? We have some rapid growth going on. Maybe a little easier to plan, although as we saw in the practice rounds, we know that there can be a bit of a recession that might come up. So okay. A little bit of debt. Team Andrews, though, not as much debt as some of the other teams outstanding, it looks like. Cool, using some debt, I like that. Cash flows, big things to take a look at. You know, inventory, not a huge deal. Erie got rid of some inventory, so that was positive to their cash flow. Ferris added some to their inventory, so that's negative to their cash flow. You know, for the other teams, you'd have to say it's a pretty minor adjustment there, so not a big deal in terms of their cash flow. Accounts receivable, no big deal. Look at the plant improvements here. Wow. Team Ferris, $30 million in plant improvements. I think we'll see why in a little bit. Team Baldwin, okay. Even though they had of the student teams had the highest profit, still investing $25 million in improvements, so that's a big amount. Look at Team Andrews. Ooh, so what did Team Andrews do? That's a good question there. Sold some capacity, yeah, which we might see. So, and didn't invest it back into other capacity or something like that, which you could do, right? Sometimes that could be an offset, but it wasn't. You know, they had a net gain there of cash. Okay, how does that affect? Let's talk about that. How does that affect, though, your profit? Let's say, can it have an effect one way or the other on your profit? Everybody understand how that works? Let's explain that a little bit. So, and I don't know what the exact numbers are in the game. The person have to take a look at them and see. But if you buy property in a business sense, okay, you get the right to depreciate that property. So let's say you spend $100,000 on a piece of equipment. Okay, and you're going to depreciate that over 5 years, just to keep this simple, right? You're going to depreciate it $20,000 per year. Straight line. It doesn't usually work that way in the real world, but just to kind of make my example fairly simple. So you're going to depreciate it $20,000 per year. Okay, so if you depreciate that, let's say for 3 years, your book value on that piece of property then is $40,000, right? You've depreciated $60,000. So your book value, what you're showing on your books, is that piece of property, that piece of equipment is worth $40,000. If you later sell that, let's say you sell it that year for $75,000, you have to book a $35,000 gain. Okay, you book a $35,000 gain. That's called a capital gain in that case. That's called a capital gain, which is actually taxed at a different rate. Yeah, it's taxed, I think even for corporations it's taxed at a different rate, but don't hold me to that. I know it is for individuals, it's taxed at a different rate. Okay, so that's what happens there. On the other hand, let's say that you have property and you paid $100,000 for it, a piece of equipment. Maybe you depreciate it 1 year, and so it's at 80 grand, but you sell it and you sell it for 50 grand. Then you're going to book a loss of 30,000, right? Okay, then you're going to have a capital loss of 30,000. Capital losses can only offset capital gains. It gets to be a little bit funky with taxes. I'll let an accountant worry about that more than myself in trying to teach you guys. But there's capital gains and capital losses, and so we might see that even in our game. Obviously, this was a cash benefit. I don't know exactly how it fit them. That might be below when we see, I'm not sure if it shows up there, other fees, write-offs, TQMs, and bonus. That's possible that they had a small loss actually in the sale of that equipment. It's possible, and that's why that's showing up as a negative there. Okay, I think that's where it shows up. I'd have to go back and look myself though and see if that's where it shows up on there. So. Okay, so we got some long-term debt. Yeah, a lot of teams issued some debt there. Some purchase of common stock like we saw up above. We see these guys buying back some stock. We did see a sale of common stock by Team Digby. That's our computer team, right? So they actually sold some common stock. Why, I have no idea. They got $30 million in the bank and they sold $3 million of common stock. That's doesn't make any sense to me, but that's the computer. It's going to do what it's going to do, right? It's kind of got a scheduled set of plans, and so it's not going to change regardless of what's going on probably. So we see some retirement of current debt, and obviously all your current debt has to get paid off every year, and then you can re-advance it basically if you want to borrow it back. 3 teams borrowed back substantially, and 2 teams ended up with some emergency loans, both Team Chester and Team Ferris. Chester and Ferris have no cash then, obviously. You know, Digby's got a lot of cash. Erie, a decent amount of cash, $23 million in cash, which is a decent amount of cash. Digby, $30 million, some money to invest, possibly. We'll see. Baldwin and Andrews, pretty good cash management. Like I said, if you can keep that around $10 million, you know, that's probably pretty decent, right? If you have more than that, you know, you could argue that maybe that's a little too much. If you have less than that, you're probably cutting it a little bit close. But you pick a number. I'm not saying that that's the right number by any means whatsoever. You can pick your own number, I guess, and kind of take it from there. Me, I would prefer to have a little bit of a cushion. Seeing if we're seeing anything here. We do see the inventories, right? Chester has a lot of inventory. Even though they're, you know, up above when we looked at their cash flow, it didn't change a lot. They must have had quite a bit of inventory coming into round 2, and they sold about what they made then, right? And so they didn't really have an increase in inventory, but they also didn't really have a decrease in inventory. Looking at this, just glancing at this. Andrews is still sitting on quite a bit of inventory, probably the same story for Andrews then, right? Yeah, so they sold their production. They would have sold their old inventory because that's the way it works, I'm sorry, but they sold basically what they produced, okay, and then still had inventory left over that was about equal to what they had coming into the round, fairly close. So, and that's still quite a bit of inventory, you know, between you got 50, 60, 80, 90, you know, about a little over $100 million in inventory between all the teams. And so it's a decent amount of inventory, you know, that you want to take into consideration before the next round. Of course, you want to break that down by segment and category and see where that's at. So, plant and equipment, no great shakes there, although you see Team Andrews, right? We saw up above that they sold off some capacity, and so we'd expect theirs to be a little bit smaller. Their fixed assets then obviously quite a bit smaller. Okay. Total equity, though, even though they sold off some capacity and whatnot, their total equity is still pretty good size. What's that, the 3rd biggest? So, you know, kind of surprising that they have a higher equity even though they sold off some of the capacity like that. Baldwin, relatively big. The computer team's the biggest. You look at Team Erie, on the other hand, on the other side is the smallest teams in terms of equity. So, sales taxes. These are huge numbers. 31, almost 32 million for marketing, SG&A and marketing, I'm sorry, and 31 million for Team Baldwin. So we just seeing some huge numbers there. I would guess a decent amount of that's in the R&D, keeping their products up to date and whatnot. But as we'll see when we get down below, we'll also see huge expenditures in sales and promotions. You know, almost twice, right? Yeah, maybe not twice, but a lot more than other teams. And we'll see if that had an impact. How did it affect their sales? Well, Team Baldwin had the highest sales. Team Erie the 2nd highest sales, and then Andrews next. Now we'll see for Erie that a good chunk of that was in one segment. Okay, a good chunk of that, probably half of that was probably in one segment if I'm not mistaken. So. profit. Who made a profit? Well, everybody but Ferris and Chester, and those weren't huge losses. You know, $4 million, yeah, that's a loss, but they're not huge losses. Certainly not anything that puts you guys behind the 8 ball where you can't come back. You certainly have the ability to resurrect yourselves. Didn't Team Ferris win last? Didn't they win the first round?
Yeah.
So they're going to have to fight back now. But again, when we look at the perceptual map, you look at the big perceptual map. It's kind of you can kind of get an idea of what they're doing, and also when you look at the production analysis, gives you an even better idea what they're doing. All kinds of capacity still, all kinds of capacity. We see that even though Team Andrews sold off some capacity, still, you know, I mean, their blue line's not that far behind some of the other blue lines here, and so there's still, even for Team Andrews, still all kinds of capacity. So excess capacity. Add into that the inventory that's on hand, and you know, lots and lots of capacity. Lo and behold, you get to the very bottom here, and we do see that Team Ferris, and one of the reasons they probably spent a big chunk of change on some plant improvements was that they're introducing a new product. So, interesting. So is Digby, the computer team. Yep. We can speculate where the product will come in at. Okay, we know for Digby where theirs is probably going to show up at. So it's going to be some interesting dynamics that happen, I think, up in those, and we'll talk about that as we get down maybe and look at those individual product lines. Again, lots of capacity. If we come over here and do a little bit of math, we see that Team Andrews, you know, here's where they drop their capacity in the high ends, high performance and size, right? You know, everybody else, you see Team Ferris has dropped in the performance and size category significantly too, and yet still invested a lot of money, right? But again, a new product gets to be pretty expensive when you're introducing a new product. So that's conceivably one of the reasons. Also, you know, you can see also some pretty good investment in for a lot of teams. More so than we saw in the practice rounds, we're seeing some pretty good investment in automation for this particular game, I guess. So it's pretty cool. We didn't look at contribution margins up above, did we? And that's a huge deal. And you know, first round, there was only, one team that was above 30, if I'm not mistaken. And yet every team's above 30 except Team Erie, and just below 30, so not too bad. But look at these SG&A percentages. You know, 20, 22, 20, 7, those are big. And again, we saw that in the big or the total numbers when we looked at the income statement. So it doesn't surprise me that they're big by any means, but that's big. So we see teams are spending some money here in marketing and whatnot, trying to gain some market share. See how effective that is as we go along. Oh, where was I? Down here at the production thing. It's kind of, that's almost too small for me to see, but if you go along the products, you'll see the various contribution margins and how they're working out. And again, it's probably more consistent now than what we saw in the practice rounds. So we're seeing teams, I think, do a little better job of adjusting each particular product and be quite a bit more consistent with those products than what we saw in the practice rounds. And that's good. Good. Segments in the traditional segment, Team Andrews kind of dominated in the traditional segment, right? Their Able product got 20% of the market. Acre down here got 6% of the market. So Acre was their low-end product that actually sold quite a bit here in the traditional segment, interestingly. So they ended up with about a 26% share. Okay, which was their potential and actual. The teams all matched their potential and actual, so nobody sold out. Without looking above then, I would guess that means there's quite a bit of inventory in the traditional segment. I can scroll back up and see, you know, 582, 150, 800, 350, 85, 244. You know, so you add those up, and there is a decent, what is that? 6, 7, 15, 18, 19, yeah, a little over 2,000, okay, or 2 million products, right? And the normal sales are for next year, you know, the sales are going to be 9 point some, so You know, and there's already 2,000 in inventory, so a decent chunk. Why'd Able sell so well? A lot of money. Baker spent a lot of money. Okay, so that's the first thing I'm going to look at. Certainly age. Its age was off, you know, 3.07. And that was at the revision date. That's interesting. And its revision date. Its revision date's a year old. That's kind of interesting. Okay, for Able. So its revision date's a year old. So it might have got off the year to a really good start, and that's why it's sold. By the end, and that's what I was going to say. I'll bet you its December customer survey is down. Okay, because it hasn't revised, and we'll see next year obviously what they're going to do with that. Okay, so the age was a little bit off, but they spent a ton of money, right, in promotion and sales, and so those things were meaningful. Price was, you know, right in the middle, I guess you would say, so price wasn't the biggest deal. So you'd have to say that promo and sales were a big deal, and maybe getting off the year to a really good start was a big deal for that particular product. But probably going to hurt them starting this next year. That's probably going to hurt them. Again, it'll depend on what their revision date ends up being, probably, because they may, maybe they got ahead a year or something, and it's going to revise right away in January. That's possible. Low end, look at that, Team Erie, and they had one product that just absolutely kicked butt in the low end. Huge, twice. 34 to 16, so better. The one product had better than twice the sales of any other product. So just a dominating performance by this team in the low end. Okay, price was a big factor. Look at that. They undercut everybody by a couple bucks. Okay, and price being the number one thing, so that's not surprising. They also spent a good chunk of change, okay, in promotion and sales. Of the leading products, right, they spent the most. If you got down to Acre spent quite a bit. It did spend the most, but Acre was a little bit out of position age-wise and a few other reasons. Okay, so Ebb really dominated. What was Ebb's contribution margin too? You guys know?
I can find it probably. It was 28.
It's 28, so a little bit under, and that's probably why their overall contribution margin was just under 30%, because a big part of their sales. I mean, it's $3.75 million. At $18, so 70 million roughly. I mean, that was really off the top of my head, but 70 million of their 50 million in sales. So almost half their sales here were in the low end. Okay, almost half their sales were here at the low end, and they still have a look at their December customer survey. Okay, so they're going to hit the ground running this next year as well because they got a great December customer survey. Okay, MTBF. Didn't bother them. They lowered their MTBF to the lowest. It didn't bother them at all. Okay, but they did spend a decent amount in promotions and sales for this particular product. So it's interesting. Like I say, we're seeing teams really stake out some different territories. That's going to make this really fun. I'm really kind of looking forward to see how this game turns out over the next few rounds because I can really see the teams staking out their territories as to where they're going to compete, and we'll see that too as we go along here a little bit. In the high end, Team Andrews gave up a lot. They left a lot of money on the table. It might have been enough, I don't know, very well might have been enough to propel them to a higher profit than Team Baldwin because they gave up what about that would have been 23, 30, they gave up about 9% in the high end. So they could have sold another 300,000 products at Thursday. They could have sold another $10 million probably in products in the high end. 30% contribution margin, so $3 million before tax. What's that after tax? What'd you guys figure out your tax rate was? Didn't you guys have that as part of your problem for this last round?
Oh, it was 35%.
35%? Does that sound right? I think that's right. I think you guys your tax rate was 35%. Yeah. So 35% tax rate. What did I say you'd make? $3 million. So take $1 million off. So you made $2 million more in profit, basically. I mean that's really rough figuring off the top of my head, right? But it probably would have been around $2 million more profit that Team Andrews could have made, which would have put them right up there right up there in line with Team Baldwin. So they gave up some there. Okay, Chester, Digby, Erie all kind of took advantage of that. Ferris we see falling off a little bit, but gained a little bit of profit because of they're still existing. You can see they're kind of falling out of the backside of that one, which is probably purposeful. How's that? Probably purposeful. Could I say that fast 8 times? I don't know. Probably I couldn't say it fast twice. So, okay, Baldwin really dominating there. I mean, that's in terms of the market share that they actually ended up getting, right? 26% or bid. I'm sorry, bid really dominating. That's pretty good. That's pretty good market share there. If I remember right, in the practice rounds, Digby kind of dominated in the high ends, high performance and size, and not so much here, right? Look at the performance. So Baldwin gave back a little bit here, right? Because they could have had over about 35% of the market here in the performance category, really dominating. Again, like Erie dominated in the low end, Baldwin's kind of making a big push here and dominating in the high performance and size. And again, let's get up. I didn't know if I pointed that out, but look at the budgets, the promotion and sales budgets. Wow. I mean, those are some pretty good sized numbers, pretty good investments, right, in promotion and sales. December customer survey, kind of so-so. You'll see that Dixie and Echo are kind of benefiting probably because of their late revision dates, so they're going to hit the ground running, okay? But they're benefiting because money spent on promotion and sales probably. Okay. Because accessibility, look at that. Wow, and customer awareness, look at that, 100%. So big deals there. Baldwin ran out, and again in the size segment, Baldwin gave up about 5% there. Somewhere around 5% they gave up at the market. So even though they dominated still in that market, they gave up about 5%. So they sold out. Could have sold some more. Once again, we see the huge investments, right? Huge investments in the promo and sales budgets. But they're also, they're competing pretty well in terms of positioning and those other things. And that I was a little bit surprised that your guys' revision date was as far back as it was in August, because I expected, especially what you guys spent on automation, that it was going to be tough for you to move your product, but kind of kept it up there pretty reasonable. Okay, Chester, well, let's go down and look at the big perceptual map. I'm going to scroll down and look at that. Chester probably did the best job of any of the teams in terms of really placing its products, especially in the performance and size categories, because really where you want to be on the performance is out to the right as you're looking at it. And on the size, you want to be towards the bottom as you're looking at it. And so Chester did a nice job. The question that I had, and this might be a really good question to ask for a, boy, this would be a tough question. I got to remember which category I was looking at. Was it in the high end? No, it was in one of these other ones. I think it was here in the performance segment. Yeah, let me look at the size and see if that's right. It was. Yeah. Okay, so in the size segment, here's a good question. So Team Baldwin obviously had the greatest sales, okay? But they spent $6 million in promo and sales in order to attain that, right? Team Chester did pretty good. They had 15% of the sales, but their sales were $260,000, okay, roughly $260,000 less than, okay? But they only spent $2.3 million, okay? Now, the question is, maybe, was the investment that Baldwin made, was it worth it then in terms of the additional sales and whatnot that it created? Okay, so if you went down, so if you took each product then and you went right through each product and you did the math on it, okay, which product would be the best in terms of profit, bottom line profit for the company? Okay, that you got to have a fairly sharp pencil to do that. That's not something you know, that you do just off the top of your head. I kind of whipped it around in my head a little bit, and I can tell you, I think the answer's pretty close. Yeah, I think the answer's pretty close. But I would hasten to throw in that that's not always the long answer, because the long answer then also is what's going to happen next year, right? You know, when you build some market share and you do some things like that, that can have some lasting effects, okay, that may offset some of the short-term effects in terms of the profit and those types of things. But it also tells you that, you know, you can be a third or fourth player in a market, and if you're doing it right, you can still make some money, right? And you might make as much money as the first player in that market, okay? So it's I think, like I said, in every decision that you make, there's trade-offs here. There's always trade-offs in every single decision that you make, and that's what makes the game kind of fun. And two teams might make completely different decisions, which they have in this particular product, you know, completely different approaches to it. And if you sat and sharpened your pencil and figured it out, it may not be as far apart as what you might think. So now Baldwin had a higher profit overall, so if you look at some of the other segments and stuff, they were a little more dominating there. But in this particular one, I kind of scratched my head a little bit about that and thought, I wonder what the math would be on that. That might be a really good question, so I might ask. Why are you shaking your head, Kaylee? You know, I hate to tell you, but that's the kind of math that I did all the time in the real world. You know, and I was looking at different things and whatnot that our bank offered and loans that we were doing and pricing and all those types of things. I had to do that kind of math all. Huh? And I hope someday you'll get paid for it. And when you do, I hope you know what it is you should be doing, right? So doing that kind of math is really, yeah. And I know I'm a sick person and I hate to admit this, but I actually enjoyed it. I enjoy it even when I'm not getting paid for it. I'm sorry, I do goofy things like this at home sometimes when I'm just sitting around, and I know that drives you guys probably crazy because you fear that someday you might end up like me, like you might actually do this kind of stuff for fun. I go, oh my God, you're going to wake up someday and go, oh my God, why'd I just do that? Why'd those numbers not make sense? And so I had to do the math and figure it out. And you're going to go, oh my God, I'm just like Professor Ofus. Oh.
I just fear someday he'll be an Orioles fan.
No, that would never happen.
That's your nightmares.
No, I don't even have that dreams about that. That's
He
like,
probably thinks that would be better than actually waking up and doing the math thing sometime, you know.
Oh,
so.
no, I'd way rather do the math.
Would you?
Way rather. Oh, yeah.
Oh, okay.
I'd rather do the math.
And sometimes the math and baseball and those types of things go together, because sometimes you got to start doing some statistical analysis and whatnot.
Anybody who's watched the picture every can give you like 30 different statistics.
Yeah. You throw in, you know, all that stuff. It's great. So, okay, perceptual map. Looking at it. Okay, what's Ferris doing? Well, they're letting some products drift, but they got a new product that's going to be showing up here. Okay, it was in the planning stages. You can see that up above, as does Team Digby. Okay, we're seeing a lot more competition out here on the front edge. I like to see that we got some teams competing a lot more out here on the front edge, not letting Digby run away with it, kind of like they did in the practice round. So the positioning's pretty good and pretty interesting. So again, I see different teams staking out different places. And you can see that up above in the numbers. You can see it here on the perceptual map. You can get a little bit of an idea of, I would hope, this is only after round 2, but I would hope that you have a reasonably good idea of what every team's strategy is. May not be perfect, you know, but I would hope that you have a reasonably good idea of what the team's strategies are. I would write that down. If that were me, you know, I'd have my little cheat sheet, and I would say, oh, this team looks like they're doing this. And you could revise that as time goes on a little bit. But then when you're making your decisions, referring back to that's kind of cool, right? It can really help you sometimes when you're making those types of decisions. So HR, we're seeing some investment in HR, small. Okay, Digby and Erie, only two teams that don't look like they're investing a lot in HR. We're seeing small effects at this point in time. But if you remember in the practice rounds, those effects got to be pretty reasonable over time. I think we had some that were approaching 20%, if I'm not mistaken, and so that can have a pretty profound effect on performance. TQM will start in the fourth round. So third round here we'll have advanced marketing get started, and so you can fine-tune your marketing a little bit with what you're doing, which might be really interesting given the positions that the teams are staking out. Fine-tuning the marketing there could be really important. So be kind of fun to watch. Well, let's see why this isn't working, and we'll see if I can try it one more time and see if we can show you who or which team was successful. It doesn't look like it's just going to want to work. I don't know.
What's your guess?
I know. I already plugged it in, and so I looked, and so I know. I can tell you this, it was once again extremely close. It was really close in the first round, wasn't it? Just a point or two that separated first place from second.
I think Digby took it, didn't they?
In the first round?
Oh, in this round.
The computer team? Well, the computer team might have, but of course, the computer team doesn't have to do homework, so it doesn't care.
You factor that in, but don't you?
Not when it comes to the homework, so no.
But just, you plug their score.
Yeah, their score's in. Yeah, their score's plugged in, and so it contributes. So, well, I don't know if I'm going to get this working, so I will tell you that before deductions, Team Baldwin had the lead. Okay. Now, Team Baldwin had deductions for leverage, and they also had deductions for working capital. In second place, before deductions, was Team Andrews. Team Andrews had deductions for leverage. Okay. And so the final score ended up being just a Molly's her eyes are this big. She's looking at me like she can't wait. So the final score ended up being just a couple points apart. I think 80 points for the winning team and 78 or thereabouts for the second place team. The winning team and the team that heretofore had been unsuccessful was Team Baldwin. So yeah. So I think the only team that had yet to win a round, right? Every other team had won a round, so Baldwin came through and they got their round under their belt, and so yay! So away they'll go. Yeah. Yeah. This thing's just, if it comes up, while you guys are working on stuff, I'll show you. But so that's all I have for today. I told you guys this would get a little quicker each week, and so it is getting a little bit quicker. I can whip through it because you guys understand it better. So anybody got questions about the round? Or
Can you go to the stock market summary?
Sure. Okay.
How big is that? I mean, there's the close and then there's the change. What?
The close was the price that each company was selling for at the end of the day or end of the year, right? Last close of the year. And then the change is what that is from the last round. So if you went to the last round and looked at your closing price, to this round and looked at your closing price, then it's whether it went up or down. And that's what I base the score on for the stock price change. It's worth 10 points in my score. Yeah, it's worth 10 in my scoring system. Okay. So the team with the biggest positive change, so for this week it would have been Team Andrews. Okay, Team Andrews would have won and would have had the 10 for stock price change for this week. Team Erie would have had second place, and Team Baldwin would have had third place. So that would have been a 10-9-8 score for that. Does that answer the question there? Okay. Does everybody know what PE means? You guys remember from finance? When you were writing it your papers?
PE, pressure, or
Man, how soon do we forget? Price to earnings ratio. Okay, price to earnings ratio. So we got our price 11.96, and earnings per share 29 cents. So if you divided 11.96 by 0.29, you'd end up with 41.3, or you should. Okay, thereabouts. Okay, so that's all that is. It can be an okay, in the real world, it's kind of an interesting marker to look at. Usually what people like to look at is price to earnings to growth ratio, which you add in another one, kind of their average growth over the last several years, so you get a PEG ratio, they might call that. When you're looking at maybe purchasing or investing in some stocks, that PEG ratio is kind of interesting. You'd like to see a stock that's growing a lot. Okay, so if the price to earnings is 40, let's say it's 20, and you've got a stock that's growing at 21%. Now, 21% and 21 are completely different, but they would still say that PEG ratio would be over 1 then, which would be a good ratio.
I have a
Question?
question. The closing stock price little graph.
Yeah.
Is there any reason why the closing dates look different? Like some of them look farther ahead than, say, Ferris and Andrews look completely.
Probably just that there's a traffic jam there, and so my guess is on their software or whatever, it probably has to put the one a little bit behind it or whatever. You can see the ones that are kind of out here by their own, it looks like they're all about touching that line pretty close. But here there's a traffic jam, and so my guess is they just kind of had to go back a little bit so you could see it. That's my only guess there. And you know, look at the price up here. That's these are nice because you get a visual look at it. And for some people, this makes more sense than this. I'm more of a numbers guy, so I would look up here at the price myself. But I find that these things are becoming more important as I get older. I don't know why, but I'm starting to recognize these things. When I looked at the perceptual map originally, when I first started using this game, it meant nothing to me because the numbers were everything. And now I've gotten so I kind of like looking at that perceptual map. So we can change. You can teach an old dog new tricks sometimes. So, okay. Anything else? Okay, I'll try to get that darn thing working so I can show you guys that spreadsheet. But I'll send it.